The purpose of Bitcoin is that it's to basically manifest the economy in digital space. It's the digital transformation of capital. If there's $900 trillion of capital, what if half of it could be transformed digitally and you move $450 trillion into cyberspace? And well, you would say, well, why would I want to do that? And the answer is, so it'll last forever. It's immortal. So it's indestructible. Check number 2. And so it moves at the speed of light. Check number 3. And so I can vibrate it at the speed of a computer.
The business intelligence firm, MicroStrategy, continues to accumulate Bitcoin in light of increasing expectations regarding the potential approval of a spot Bitcoin exchange-traded fund in the United States. MicroStrategy and its subsidiaries recently acquired an additional $4,620 Bitcoin between November 20, 2023, and December 26, 2023, at an average cost of $65.79 per Bitcoin. In the official 8K filing with the U.S. Securities and Exchange Commission, the company disclosed the details of its latest Bitcoin acquisition. The total cost of MicroStrategy's most recent Bitcoin stash amounted to approximately $42,715, bringing their aggregate purchase price to around $5.9 billion. The average purchase price per Bitcoin in this transaction was approximately $31,168. This recent purchase follows a significant acquisition of 16,170 Bitcoin in November 2023, where the firm acquired the cryptocurrency at a price of $6,795 per Bitcoin. Notably, MicroStrategy's CEO, Michael Saylor, a prominent figure in the Bitcoin world, has extensively discussed Bitcoin principles and dynamics, making bold claims, as highlighted in the accompanying video.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
Bitcoin's primary role is to serve as an economically sound, technically sound, ethically sound foundation for the future digital economy. It is, in essence, sound digital property or sound digital money. I've described it as digital energy, but you can think of it as digital material. How do we manifest $100 trillion of real value in cyberspace, right? How do we do that and make that stable, right? Before Bitcoin, all money, all financial transactions in cyberspace are based on credit, right? There is no digital money. There's only digital credit in the world before Bitcoin. So I send you $1 billion or $1 million. It's a credit on Visa network or on a banking network. And if the analog real world institution chooses to honor the credit, then the money changes hands. But we've talked about the problem with that before. Like I want to send $1 million 40 times, and every time I lose 2.5%, and it takes 1 month. And so it takes 4 years to move the money 40 times, and I lose all the money, right? In essence, after 40 vibrations of the money, it's gone. So the world of credit money isn't a foundation to build anything lasting or functional in cyberspace. So Bitcoin's primary role is to serve as a digital monetary foundation for the future of humanity. And if there's $900 trillion worth of stuff circulating, right now 0.1% of that is digital money, as we understand it with Bitcoin. If we want to actually move into the 21st century, into the cyber economy, you could imagine that we should be getting to 100, 200, 300, 500 trillion dollars worth of monetary value circulating digitally. So it's the foundation in the same way that the granite is the foundation of Manhattan. But it's not the applications, it's not the buildings, it's not the businesses, it's not the political systems. And so to think that it's the currency is a mistake. It's not meant to replace equity. It's not meant to replace currency. It's not meant to be a medium of exchange. It's meant to be the underlying conservative foundation of the entire economy. People that they live for digital currency, they just waste all their time chasing after the wrong thing and debating the wrong thing. Currency is not even that valuable. I mean, if you look at the entire world economy and you ask what portion of the economy is in currency used as a medium of exchange, is that like 1, 2, 3%? Like, what percentage of the wealth of any wealthy person would be currency they use as a medium of exchange? You'd be lucky to see it 1%. So only 1% of the economy is anything related to currency. To focus upon Bitcoin needing to be a currency to create value is missing 99% of the opportunity. The real value of Bitcoin is if I put the other $900 trillion into the digital ecosystem, I could defeat inflation, which is decimating 10% of all the wealth in the world every year, right? That's a big idea. Or I can move the money 1 million times a second instead of 1 time a month. So what we're talking about is a high fidelity, high frequency method. The ability to move money based on a computer program 1 million times faster, 1 million times cheaper, and the ability to manifest capital in digital form such that it'll last 1 million times longer, right? That's the breakthrough, right? 1 million times 1 million times 1 million, right? It's a lot better.
Not everyone shares optimism regarding the implications of a spot Bitcoin ETF entering the market in the United States. According to Bitcoin analyst Joseph Tetek, the introduction of a spot Bitcoin ETF could potentially lead people away from self-custody, possibly resulting in the creation of millions of unbacked Bitcoins, among other risks. Some skeptics, including BitMEX co-founder Arthur Hayes, warn that if spot Bitcoin ETFs become too successful, they could pose a threat to the stability of Bitcoin. Hayes expresses concerns about the potential destruction of Bitcoin due to the widespread adoption of these ETFs. Now, let's delve into the dynamics of Bitcoin, as explained by Michael Saylor.
The real key with the network is that we want the network to be a basis of a cyber economy. We need to be interested in the natural harmonics of the network and the natural frequency of the network, because the frequency of the network is key to the stability, the security, and the success of the network. Have you ever seen that picture of the Verrazano Narrows Bridge where they engineered the bridge with a natural frequency which resonated with the wind? The wind blew over the bridge and shook the bridge apart because it resonated on the wrong frequency, and the bridge fell apart, literally destroyed the structure. So if you're a good civil engineer, you have to ask the question, am I designing a structure that is not going to shake itself apart? So if you look at the dynamics of the network, one of the reasons that Bitcoin is winning is because it has a very long natural frequency at its base layer. The transaction frequency is 10 minutes, and in a growing network, right, we'll process blocks 9 minutes 30 seconds or 9 minutes 40 seconds or something, because you're always biased, to be growing. In a bear market, if you're shutting down hash power, we'll process blocks a little bit slower. But generally, you'll be around 10 minutes plus or minus a bit. And if you get way off, then after 2 weeks, the difficulty adjustment kicks in and you get basically tuned back to that 10-minute center. I think that's an important part of the frequency of the network, but it's probably not the thing that makes it most successful. What's more important is the mining dynamics and the machinery dynamics. So the question really is, how long does it take to bring on a Bitcoin mining center? It's like I put $100 million in front of you and you want to invest it in Bitcoin. So it takes you 6 months to a year to acquire the equipment, another year to engineer the mining center. So it's like a 2 or 3 year exercise to bring it online. And then the question then is, well, what's the payback time? And that's probably another 2, 3, 4, 5 years. So when you're a miner, you're looking at making an investment and getting paid back 6 years after the initial decision, probably 4 years minimum at this stage. It could be as long as 10 years, 4 to 10 years. So the natural frequency of the miners is 4 to 8 years. And that means that if you're not profitable, you're not just going to shut down the mining operation in a month or 2 months or 4 months. You've actually got to stick it out for 4 to 8 years. And one of the other dynamics here is because the miners are running digital power centers and the digital power is SHA-256 hashing, that means that if a miner goes bankrupt, if you look at how the Bitcoin network fails, it fails very gracefully, if not at all. All of that hash power, the 500 exahash, it is being run by a network of miners. And in hard times, when the price of Bitcoin falls and the transaction revenues fall, the first thing to fail is the equity. And at some point, the equity holders will go bankrupt. At that point, the mining equipment is owned and run by the creditors. So then the junior creditors will fail, and then the senior creditors will own the equipment. Then when the senior creditors fail, the energy companies that actually provide the electricity will own the equipment. And when the energy company fails, the government or the nation state that actually owns the power source will own the equipment. So it's another way of saying that a Bitcoin mining rig is never getting turned off.
Billionaire venture capitalist Tim Draper has boldly predicted that Bitcoin will reach $250,000 in 2024, emphasizing his optimism in an interview with Coinbureau. Draper anticipates this milestone arriving sooner than expected and envisions the price exceeding his forecast. His bullish outlook aligns with a broader trend of positive expectations for Bitcoin, fueled by growing excitement over the potential approval of the first spot Bitcoin ETF in the United States by the Securities and Exchange Commission. The cryptocurrency industry is buzzing with anticipation, eyeing an early 2024 arrival of the spot Bitcoin ETF and significant gains for the asset. Draper, known for his earlier prediction that Bitcoin would surge from $4,000 to $250,000 in just 4 years, expressed surprise at the cautious stance taken by the United States. He believes that with a more receptive U.S., discussions around Bitcoin could resemble those in nations like El Salvador. Draper's confidence in Bitcoin's performance remains strong, suggesting that if it hits $250,000 this year, the price will likely surpass that figure. In addition to his price predictions, Draper discussed the transformative potential of smart contracts in Bitcoin, foreseeing a new economy with reduced friction. As bullish sentiments surrounding Bitcoin amplify with the approaching ETF year, expectations for further positive developments and potential price surges are gaining momentum. The comments section below invites discussions on whether Bitcoin will experience another significant uptick before the year concludes. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.